As living expenses continue to rise exponentially, there's been new reports coming out on the topic of retirement and just how much money Americans will need in order to be comfortable. And needless to say, these numbers aren't looking too good. Historically, having $1 million saved up for retirement was long considered to be the gold standard for retirement. You may not be able to live lavishly off $1 million, but for a long time this was the amount people aimed to have, and you could typically live off of this amount if you were at retirement age. But when considering inflation along with rising costs of healthcare and other living expenses, experts are now projecting that $1 million won't be anywhere close to enough for retirement, especially for younger people like millennials. According to the website Seeking Alpha, they estimate that someone aiming to retire in about 30 years should aim to have at least $3.6 million saved up for retirement. And if that wasn't outrageous enough, it was even suggested that people round up this number to be safe and instead aim to have a minimum of $4 million for retirement. This assumes that you want to retire no later than turning 62 years old and you haven't saved up anything with the exception of an emergency fund. For people who are about 40 years old and want to retire by the age of 62, they can get by on a mere $2.8 million in savings according to this article. Another report by WealthCare Financial also paints a similar, although slightly less severe picture. According to their estimates, millennials and Gen Zers will need around $3 million in retirement savings to properly enjoy their golden years. And the younger you are, the more you'll need to have saved up by the time you eventually retire. There's several reasons why $4 million is the new $1 million apparently. One of the biggest factors for Americans is healthcare. A study found that a married couple retiring today can expect to pay roughly $930,000 over the course of their retirement on just healthcare-related needs. Other factors including housing are also major contributing factors to this large number that websites are recommending. Now, if you ask for my personal opinion, I think these numbers are overblown. Even though this article is for people who aren't yet retired, I know a lot of retirees who don't have $1 million saved up. But the majority of them were able to make smart moves, or they were privileged enough to do certain things like paying off their home sooner, moving to less expensive areas of the country, and having the discipline to live very modest lifestyles. They opt for eating at home as opposed to eating out, they take road trips instead of European vacations, and they don't buy expensive cars. But this article claims in 30 years you'll need $4 million to live comfortably, yet I know people who are comfortable on less than $1 million. So I do believe that most people will be able to get by on less than $4 million 30 years from now. But this article does highlight a major issue that most Americans are facing, which is that most people don't have nearly enough money saved up for retirement today. According to new research, there's more millionaire 401k holders today than there ever have been before, but this number is still low at just 378,000 individuals. The number of IRA millionaires is slightly less at 350,000 Americans. But other studies show that the overwhelming majority of Americans don't have anywhere close to $1 million saved up in their retirement plans. Every year they release the average 401k balances of Americans, and every year the numbers are pretty depressing. It's no surprise that as age increases, the average savings amount increases, but for older Americans, they're still far below where they ideally should be. People between the ages of 50 and 55, which are people who are either close to retiring or should be retiring, only have an average 401k balance of about $161,000. It does get better for those 55 to 60 at just shy of $200,000, but this is still nowhere close to where people ideally need to be. But once you do reach retirement, and assuming that you invest in mutual funds or maybe some index fund ETFs, the next problem you'll have is making sure that your money lasts. And what's unfortunate is that for the success of your retirement, the rest of your life is largely based on timing. Assuming that you're relying on selling shares of your holdings to fund your retirement, one of the biggest causes of stress is whether you'll be able to make your money last. Using the tool from Portfolio Visualizer, we can look and see how well an investment portfolio would have performed over time. Let's go with a really basic example. Let's assume that you had a lot more than the average amount in your 401k and assume that you had $400,000 saved up. On January 1st of 2000, you decided to retire and your entire portfolio is in an S&P 500 index fund. We'll assume you're doing pretty well and that you only need to withdraw $2,000 a month from your brokerage account. So how much money do you think you'd still have today if you sold shares of your investment to fund your retirement? If your answer was zero, you'd be correct. In fact, according to the visualizer, you would have run out of money all the way back in 2012. So not even close to having any money around 23 years later, which isn't far-fetched knowing how long people live nowadays. But might I suggest a different investing strategy? Instead of investing in a broad market index fund, let's instead invest in an income stock. I'd personally define an income stock as any holding that pays a dividend and yields around 8% or more. We'll go with Ares Capital, ticker symbol ARCC, which is a business development company that offers investors a consistent high yield. Now, Ares didn't launch until 2004, so for this example, I'm going to move the retirement date to January 1st of 2005. If we look at the long-term share price performance, you'll notice that it's remained very flat over time, as these kinds of companies typically don't experience much share price growth. With everything else left the same, including the $400,000 balance and the $2,000 monthly withdrawals, how much money, if any, is still left in our portfolio? Believe it or not only would you still have money left over, but your portfolio would have grown significantly. Your $400,000 would now be worth $714,000 after again withdrawing $2,000 a month for over 18 years. This example highlights what I believe is not only the best investing strategy, but also one of the best ways to fund your retirement. Most people choose to invest in shares of index funds and other diversified holdings and then sell their investments as needed. But this strategy just isn't feasible for people who don't have large amounts of money saved up for retirement. If you have $1 million or multiple millions of dollars saved up for retirement, then you probably can survive living off shares of index funds. But if you don't have over $1 million, or maybe you're just a fan of investing for cash flow, holding high-yielding investments is going to ensure that you'll be able to live off your investments. So how is this possible? It's because this person is living solely off the dividend distributions and they're not selling shares of their stock to fund their retirement. If we take $400,000 and divide it by the current share price of ARCC, which is $19.06 per share, we can see this will buy us 20,986 shares of this stock. If we then take this number and divide by the current quarterly dividend of 48 cents per share, we get $10,073. If we then divide that number by 3, we'll see how much money this person is making per month in dividends from this stock. This income stock pays $3,357 a month when divided by 3 since there's 3 months in a quarter. So this person is able to live off $2,000 a month and they're leaving the additional $1,357 to reinvest back into buying more shares of ARCC. In our first example with an index fund, the investor wasn't living off dividends, but they were instead choosing to sell their shares of their investment every month. And unfortunately for them, they didn't have enough money after only 12 years. Had they chose to instead invest in stable, high-yielding income stocks, the results would have been much different. So let's try this again using a different example. Instead of Ares Capital, let's use the PCM fund, ticker symbol PCM. This is a closed-end mutual fund that offers a very high dividend yield. Normally it yields anywhere between 8 and 12% and it pays monthly dividends. Looking at the share price of this thing, it's actually gone down quite a bit over time, so that's definitely going to be a big red flag, right? Well, not if you chose to retire on this back in January of 2000. Instead of holding an index fund, holding PCM would have provided you with a significantly better retirement. Just like ARCC, your investment portfolio would have grown much larger over time. And in fact, you could actually withdraw more money than just $2,000 per month since it's been doing much better. I hope I'm really driving the point home here. If you're like most people who don't have millions of dollars saved up, then pursuing income investing might be your only way of living off your investments in retirement. If you have other sources of income like a pension or rental properties, then you probably can live off non-dividend paying investments. But income stocks and ETFs are the most realistic way that you can live off your investments for the entirety of your retirement without having to worry about running out of money. If you can survive solely off the dividend distributions alone and not having to sell capital of your investments, then this, in my opinion, is the superior way to invest. But now it's also important that you do not chase yields. Don't just invest in stocks that are offering the highest yields because these are often the riskiest. When you come across a stock that's yielding something outrageous like 16%, look at its share price to see if it's been collapsing over time. Also, look at the dividend distribution history to make sure that they haven't cut the dividend a bunch of times. But ultimately, income investing will allow non-millionaires the opportunity to live off their investments without having to worry about how many shares they can sell. On this channel, we're all fans of dividend and high-yielding income investing, so feel free to check out some of the other videos on this channel for some high-yielding stock ideas. But hopefully this video shows you that it is possible to fund your retirement without having millions of dollars saved up. But with that being said, that's going to conclude today's video. If you're interested, feel free to check out my Patreon where you'll find an Excel sheet of all of my holdings updated monthly. Plus it'll give you access to our Discord channel where we discuss higher yielding types of investments. With that being said, thank you all so much for watching today's video. If you liked what you saw, then feel free to hit that like button below and click subscribe if you want to see higher yielding investing strategy content. Again, thank you all so much for watching today's video, and until next time, take care.